Well, hello everyone. Kim here from Traders Club, and thanks for tuning in. I was going to. First of all, last Wednesday, what happened was I was really busy. I was not able to do the live midweek update last Wednesday. So for those of you who signed up for the semi-weekly live midweek update, I canceled that meeting and I sent you guys a message that I was going to put up a video. Apologize. I did not do that. I just was, very busy with, a lot of stuff here. And so, I want to make it up for that. And so I want to put up a video tonight for midweek update. Obviously, we're going to have, I'm thinking we're probably going to have live midweek update next week. Again, but today we'll do it in a static video here. So, this one gonna be for you guys, for those of you who signed up for semi-weekly live midweek update, and for those of you following TwoTradersClub.com following the blog, and also for those of you who are subscribed to my YouTube channel, because I will not be tweeting this out to the social media venues. So let's get to it here. And obviously, what I'm going to do today, we're going to try to go through them very, very quickly. We're going to look at, the major indices here, Russell, the NASDAQ, and the Dow, and the Spider, and see where they're headed. And then, we're going to look at some of my positions that I've been blogging about, see where they're at. So that's kind of what we're going to do today. And just kind of giving you guys an updates of the market, and giving you guys updates of, my current positions that I'm currently holding. So let's get to it here. Obviously, Spider, we've been looking at this quite some time, right? We've been talking about this quite some time, and we've been, this is a level that it has been protected, and it has been served as a pivot level in the past. You can see the old resistance becoming new support here, and then here resistance now becoming new support, and then now we're doing what we're seeing is very similar to that. Though what we're seeing is very, very short term bounce up and down kind of move. And you know what though, we've kind of actually perceived that was going to happen after this kind of move. And I'll tell you why we perceived that the move after this kind of move, when we came down, in our analysis, we thought that we are not going to have a smooth bullish run again. We thought that we're going to have kind of a sluggish, kind of a turbulence-like, move, respecting this pivot level, because of fact that this is a daily chart here, Spider, and line chart with some of the oscillators here, because of fact that we continue to have what is this bearish divergence. And one thing about bearish divergence that I talk a lot about is that bearish divergence you want to short the market because of this bearish divergence. And obviously, I wouldn't recommend looking at just bearish divergence, and just blindly shorting the market, or just looking at, looking at bullish divergence and blindly going long. You really need, you have these indications, right? They're like a bearish divergence here, and you really need the price action to confirm this move, which means, at least you wanted to see, the price start to break, at least at minimum, break below this level, at least close below that, close well below that. You know what I mean? And even then, because we're on an uptrend, I can't even guarantee that it's going to continue lower, but at least you have a first level pivot broken. So when we're looking at this, we've been looking at this quite some time, since you can see since let's see here, since June, early June here. We've been looking, well, actually it didn't really start to form till late June. We started forming right about here. So, and because of that, we forecast that we're not going to have a smooth move. We're not going to have another thriving move. What we're going to have, if anything, we're probably going to be very sluggish, but what I like to call grind higher move. And that's kind of what we're seeing here. We continue to grind higher, right? You see that, and then you know, you can see that, you know, in a minor term, you know, you can see that we are cultivating higher lows, and we do not, nobody truly knows how long it's going to continue. That's the thing about it. How long is that going to continue? We do not know. But for the fact that we continue to have this bearish divergence, you know, we're probably not going, until this gets nullified. For it to be nullified, what you want to see is that you want to see MACD and stochastic and RSI. What you want to see is this thing getting back up, and when you draw a line like this, that blue line gets well above that level. And obviously, again, what did I say about the price action? Obviously, you want a price action to confirm that nullification of bearish divergence. So you want to start seeing, you know, the price action starting to make, you know, start to get some confident looking candles, right? You know, I'll give you a good example here. So you can see that we had a bearish divergence right about here. This was back in what, you know, April. And then, so this is April right here. And so we had, is it April? No, that's not April. That's April right here. So we had a bearish divergence. And then we started going up. And then you can see a lot of sluggish move with that bearish divergence still in play right here. So we're looking at same thing here in this chart and then right side. But this is a line chart, this is a candle, and then what we're starting to see is we're starting to see some you know, once we start to clear this level, and then when we gap that up, that was the confirmation. And then I think that was, you know, like late May. Actually, you know, for early confirmation, once this thing went up like this, that was kind of an early confirmation that bearish divergence was starting to die out. But obviously the price action though, right? See, the bearish divergence was starting to get nullified when MACD started to pulling back up, but that at that time the price action was not really, because I mean, this could have still rolled over. If this still rolled over, you would have seen this thing going back down like this. So you need the price action to kind of really, you know, confirm that. So once we got above that level, you can see that, you know, it was able to freely move back up and then continue to grind higher like this. So for Spider to, you know, continue higher and maybe see another move like this, is that, you know, we would want to see the MACD, the, you know, blue line starting getting up, and then the price action starting to showing or to confirm that nullification. Once we see that, you know, I think we might able to see few more weeks of a bullish run. If we don't, you know, if we're able to bounce from that level. And something, you know, we've been talking about a couple of months now is that, you know, last time you can see that we hung around here for how long have we hung around here? March towards May, about 2 months here. Same thing happened here about, you know, late, you know, November until this one was much longer, November until February. So about 3 months. Okay, right? So November, December, January there. I'm talking like not February, end of February, but like late January. So 3 months, and we've been here so far June. Okay, so we're end of July, so we've been here about 2 months. And let me say this does mean that it's 100% guaranteed it's going to go up here? No, it can roll over. Nothing is guaranteed in stock market. That's something that, you know, you guys probably understand. You know, but all we have is probability, because of the fact that, you know, last time it held this level after 2 months with a pretty good bullish run, like maybe a month or so, maybe 3 weeks of bullish run, and then this one's really grinding though, really didn't have a really smooth run. But then we had about 3 months of a, you know, 3 months of grinding higher run here, and here we are getting to 2 months here on Spider. So does this mean that, you know, can we have maybe something like this, you know, like what we saw back in May 2013, May, like this bullish run? Or are we going to have maybe a little bit of run here and then a little bit more consolidation and then roll over something like this back in January 2014? Well, that nobody knows how it's going to play out. So how we approach, how I approach the market is this. Well, as long as we're above this level, benefit of doubt goes to buyers. I have no idea how it's going to play out, but I have to say that bulls are winning. The trend is up. You can see the primary trend still higher lows and higher highs here. So, we have to give benefit of doubt to the buyers. And same thing happened even today, even on this day. Every time it comes back down to this level, something happens. Again, that does not mean that tomorrow it can't do that. But how many times, do you think bears trying to guess this, guess that, guess this, and that didn't work out? You know what I mean? So until we get a full confirmation, as of today, with the tangible data that we have as of today, this is a tangible data, right? The ghost data will be like, well, he's going to do this tomorrow. Well, we don't have that data yet. So we can't say what's going to happen, but there's a higher probability that we probably continue, at least grind higher, at least perceive that in short term that we're going to see some more bullish, bullish action here. And bearish divergence is there. We looked at it. It's there. But it's not, easily rolling over. It's being very, very resilient. And also, as far as the bearish divergence is confirmed, these grinding bearish divergence, they're not potent bearish divergence. You want to see a clean shot at it to be a very, very potent. So for the fact that it has been grinding, he's been hitting it so many times, it actually loses its potency. So, and also I just pulled up 50 EMA. The reason I put up 50 EMA is because if you are, like me, more of a longer term trader, if you're a longer term swing trader, you're a position trader, then even if we break below this level, I wouldn't just, go ahead and short this market for the fact that, well, 50 EMA has been served as very, very strong support in the past. It has a very impressive resume. Let's take a look at it. Ever since, 2012, New Year's, you can see that 50 EMA here, 50 EMA here. Even these two occasions that we try to find some support there, 50 EMA there, 50 EMA here, 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 here. So, there were times where it broke below 50 EMA, but it was very short-lived, didn't it? Like, even this time we got below that, but it lived like 2 days here, maybe 3 days, maybe a week here, maybe a little bit lower, maybe 2 weeks there, maybe 3 days. But you can see how that 50 EMA is a very, very important level. And obviously, you don't want to look at 50 EMA like just because it hit that level, you're going to start buying or buying the dip, but it is a reference point, right? So, for the fact that even just recently, not looking at the past here, but even recently, how many times we found support at that 50 MA here? Boom, 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 boom. So even if we break that level, 50 MA is just right below that level. So I would have to say that, there's still, something that I say a lot is a cultivation, the word cultivation. After market is up like this, we're not going to have a correction without a cultivation. What I mean by cultivation, some kind of a topping pattern, some kind of a head and shoulders, triple top. If you just study any kind of a correctional signal, right here, we got a head and shoulder formation there. We got a little bit of head and shoulder there. We got a little bit of triple top, the mini ones, but we had a little bit of correction there. And even, when we had a market crash in 2007, you can see the head and shoulders there. And then, so it didn't just go up and then one day just rolled over, right? So that, and when we look at this, where we're today, we haven't even begun to see any kind of bearish reversal, topping, correction, formation. You could ask me, well, Kay, weren't you pretty bearish back here? Yes, I was pretty bearish back there. And do you know why I was pretty bearish back there? Well, at the time, the NASDAQ had this head, what it looked like, right? What it looked like, head and shoulder formation that never played out. The thing about that is head and shoulder formation tends to play out very well. It has in the past where you can see that left shoulder head, right shoulder. We had that correction there. Similar something here. This one's kind of a more sub or more of a mini size, but that was, left shoulder head, right shoulder there. And this one right here, left shoulder head, right shoulder there, right? And then after steep uptrend, we started having similar formation. So that's why and also the Russell was breaking down at the time. you know, and micro caps, and there was a lot of signals that you know, led for me to believe that there might be a correction there. But then when once the NASDAQ started going higher, when the Russell started to nullify the potential formation, now that, you know, after that has been, you know, because if anything, this would have been the time for bears to really do something here. Maybe they could have done something like this. And then they just completely nullify that pressure there. Any kind of any kind of cultivation that bears trying to put together, well, bulls just came and, you know, pretty much just destroyed it, demolished it, and demolished the dream from the bears. So, and now looking at this, same with Dow Jones here. Looking at this, you can see this Dow Jones also holding this level right here. You can see the old resistance continue to become new support. Dow Jones went to 50 MA here. 50 MA also very, very strong support in the past. You can see that how many times it has become support level. So as of today, with the tangible data that has been given to us, is that benefit Dow still goes to buyers. Yes, there's been a little bit of sell-off, and you know, we do have bearish divergence on the Dow Jones as well. But again, because we're holding this level, because we're at the 50 MA, I would have to say there's higher probability that maybe the the market could continue higher this week. Another thing to note, I don't know if you've been following my blog here, and you guys remember chart that I showed you guys with TNX versus Spider. Well, that warning signal is actually still there. However, you can see what happened today on 10 years Treasury yield today. It is refusing to roll over. As long as the Treasury yield refused to roll over, I would have to say that that market warning signal, the steep correction warning signal, may be delayed. Let me just kind of go back what I was talking about here. This is Spider Treasury yield here. You can see that. You know, I mean, this is a pretty scary chart for the fact that, you know, that we have this preeminent and prominent resistance level here. And once that neckline is, you know, flirted and then got rejected, you know, you could say retested it, and then that was it, right? Same thing happened here. We got a neckline right here. That was retested it, rejected, and that was it. What we have today is very similar. The neckline right here, retested it, haven't gotten rejected yet, because what we're seeing right now is that it is being resilient. It is. So, I mean, what we've been talking about here at the Traders Club is that there is possibility that we might hang around here for I don't know how long. We could just continue to consolidate here for a while. So warning signal is there, but you know, we might able to continue to grind this out and delay that. You know what I'm saying? So because any of these indications that we have, they're just without the proper price action confirmation. You know, we can't put too much weight on those. So looking at the market today, and you know, let me go through this really quickly here. Same with the NASDAQ here. I mean, NASDAQ just been bullish. You know, we've been kind of a stair stepping here. You can see that old resistance and new support happening here, and higher lows, higher highs. So, you know, bears lost their chance. This was the time. This is the cultivation. Bears really did work very hard to cultivate that, to put that together, and then their dream was shattered, and then bulls got it. So right now, there's gotta be another formation. It's gonna come. It's not going to just do this one day. I promise you, that's not gonna happen. If that happens, that is gonna be like once in a lifetime, like, you know, like event that everybody's gonna remember. That's not going to happen. We're going to see something, some kind of topping formation, and a lot of times those topping formation, any kind of steep reversal, any kind of steep correctional move, or even market crash, it takes up to 6 months to build, 3 to 6 months. So, you know, it's very, very difficult. It's a very difficult endeavor if you're trying to find the top here, call the top here. So trend is up, higher lows and higher highs, you know, we continue to give benefit out to the buyers. Same thing with the the Russell. Yes, Russell did come down, right? The Russell did come down. You know, you know, this is where a lot of people calling this double top. That ain't a double top. You got to understand the sentiment of it. I don't have time to explain why that's not a double top, but that's not a double top. If anything, possibly some kind of a channeling action we might see, you know, but that's not a double top there. I guess, you know what, everybody has a different way of looking at technical analysis, but you know, I tend to really stick with the origin of technical analysis. The founders of technical analysis, when they first developed the technical analysis. Because I mean, over the years, people start making things up. So anyway, so again about this, you know, about this pattern, you know, you could say, well, there might be still massive topping pattern here. Well, you know, I think so. But the thing about that is, this should have been a lower high. You know what I mean? Something that I say is that equal lows. We got that. Equal lows plus lower high equal correction, right? Well, the thing about that is we do not have a lower high. We have an equal high. See, that's the problem. Which means they both pretty much nullified potential head and shoulder formation. I mean, yeah, they can possibly still bring it down, but can Russell do it by itself? NASDAQ is up, the Dow Jones still up, the Spider still up, even the banks are up. Can the Russell do it by itself, right? That's the thing. And just looking at the financial sector here, financial sector looks like they just wanna, like, this is a consolidation. A lot of times consolidation is not always true, but has high probability of breaking to the upside, especially in an uptrend, right? Because bears don't like consolidation. Bears like to just bring it down. These are bulls. What they like to do is they like to rest. They like to rest while consolidating and then for another bullish run there. So obviously we will need to get above this level with some strong looking bullish candle. But that also, so the question is, can Russell do it by itself, right? Even Treasury yield, you know, looks to be don't want to roll over it yet. So to summarize what I've just talked about in the indices, I would have to say that the market is in bullish sentiment and continue to illuminate and create bullish environment. And so, you know, I would have to continue to give benefit out to the buyers. And thus, these are some of the potential level that you can look this week. If we break below this level this week or next week, make sure to look at that 150 EMA there. If that level gets broken, you know, watch out for some of these support levels. That's just the thing about it. It's very, very difficult. Is that there's so many support level that comes in here. You can see, even if we break some of these levels, nobody knows truly where it's going to find support. All we know is that it is continue to cultivate, looking at a primary term here, higher lows and higher highs, and that means that we might get pulled, a little bit of sell-off here and there, but generally it has higher probability, because nothing is guaranteed in stock market, a higher probability that it's going to continue higher. So, let me know if you have any questions about the market on the, the comment section below there. But I perceive that the possibly that market could continue grind higher. But as long as we have this bearish divergence, in these indices, I don't think until they get nullified, which I explained what you want to look for just earlier. Until they get nullified, we're probably not going to see a smooth bullish run. We're probably going to continue to see a turbulence, which means it's going to try to go up, and then it's going to be sluggish, and it's going to come back down again. It's going to go up again, sluggish, up and down, and a lot of that move until that bearish divergence gets nullified. So I'm going to go through some of these positions here and just give you guys a little bit of update there. I'm probably going to update my journal as well tonight. I just haven't had time. Just been very busy with my other business and my current subscribers to Traders Club there. So, but I have some time today, and so actually let's go through it here. Tesla. Here's a reason why we held through. Obviously, it came down. And we don't freak out on pullbacks. If it doesn't work out, it doesn't work out. But sometimes you gotta stick with the trend And one of the things that we were looking at when this thing came down, it started fizzling around here, and the reason we stayed with our position is the fact that, first of all, this is the first thing, is that we're holding this level. We're still holding above 50 MA. Remember 50 MA? 50 MA, you know, obviously there are occasions where we gotten below that, but 50 MA is a great guide to see kind of where the stock is going. And so but really what gave us, you know, more signal, or the potent signal to stay into our position, was that this right here. This is what we call bullish divergence. This is 65-minute chart. 65-minute chart here, hourly chart, or actually 65-minute chart. So you can see this is what we call bullish divergence. And for this being 65-minute chart, we didn't know how potent this is gonna be. But, you know, given the fact that we are still above this pivot level, we're still above this, this 50 MA. You can see the pink line. And then along with this bullish divergence that we had, we decided that we're gonna stay with our position. So we're kind of back to kind of a square one here, and you can see where we did close above this resistance of this. Is what I call recent pivot, because there's a potentially that it could become a new support. We're just barely getting above that. So if we can continue, I know tomorrow night is the earnings, so just keep that in mind. But if we can have another bullish day tomorrow, I would have to say that we can continue higher. And you guys remember my article I wrote, I think about 340, possibly even 320, as long as this market continue to illuminate bullish sentiment market, which it has been doing. So you can see higher lows still intact, right? And then intermediate term, we got a higher high. We just need to get up here and make new highs. If we can do that, trend could continue. We can continue. So I'm pretty optimistic in that. Possibly, we can continue higher with that. Comcast, the thing about Comcast is that bulls made a run for it, right? You can see a long wick here, and you could be like, oh my goodness, that's the humongous shooting star, and I'm gonna start shorting. No, you don't do that. The thing about the candlestick analysis is that you cannot discredit the trend that it has developed and then put too much weight on this one day action, which means, well, we have higher lows, higher highs intact, we have this uptrend intact, we have this pivot that held, and yes, we're at the resistance level, but one day shooting star. I mean, could this thing could have rolled over? Yes, it can. Again, anything can happen. I'm not, what I'm saying is that the probabilities of the benefit of the doubt can still went to the buyer, unless you're a day trader or something like that, very, very short-term traders. For me, no, that wasn't going to scare me out. I said, you know what, if it goes lower, it goes lower, but I got to stay with the trend. And so, that action is trying to nullify yesterday's selling pressure. Obviously, we have a wick here, but it could still continue to grind higher. And so we'll see what happens here. But looks like if the market could maybe have some bullish run next few days, I think we can get to about 58 here on Comcast. So to me, it looks good. To me, we still have this huge inverted head and shoulder, which I talked about on my journal post there, still in play. Higher lows, higher highs, uptrend still intact. And yes, we're at the resistance level, but it looks like it wants to get up. Google, same thing here. We got up and down moves happening here, and we perceived that was going to happen because you can see Google. We also looked at this kind of a bearish divergence here. You can see that. So when we're doing analysis here, hey, we're probably not going to see smooth move to the upside. Plus, the spider also have bearish divergence as we looked at. So we're probably going to see some turbulence here. And when we see turbulence, what you want to do is that you want to stick with the big picture. You can see that uptrend is still up. You can see that uptrend here, 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 and 50 EMA is not even, you know, we're still far away from 50 EMA. So higher lows, higher highs, uptrend support held. So benefit Dow still continue to go to the buyers. Yes, we're at near a resistance level. Can this thing roll over? Anything can happen in the market. But so benefit Dow continues to go to the buyers. I think, you know what? I think if we get some good bullish days in the market, Google will do very well. And you guys seen my, did I do? Oh yes, the 700 Club, right? The 700 Club article. So I mean, that's ultimately where I think it's gonna go. I don't know what I'm gonna do with my position. I might close it out on the way up here, so yeah, I mean, you know, so I think we can continue higher in this name as well. As long as they continue to cultivate higher lows, higher highs, I think it will do very well. For solar, same thing here. I want you to show why we stick with our, even though we had a pretty nasty sell-off, we decided to stick with our position. Is that, well, we had this bullish divergence on a 65-minute chart, and not only on RSI as well. You can see the lower lows, higher low. So what it was telling us is that there's a lot of there's this kind of hidden accumulation was happening here from the buyers, and so they brought the price back up, but it has been a little bit sluggish after this gap up. But you know what, that kind of looks like a bull pennant pattern here. If we can break out to the upside, I think we can have another run here. You can see higher low still intact. That's a good sign. This thing did not come all the way to this low, but yet it made a higher low here, and then we kind of got above this level, which is a good sign as well, because there might be potential, you know, possible head and shoulders. But so we're kind of above that, and if we can stay that, if we can keep that gap open, if we can have another bullish run, if we can, you know, get above that, I could see this thing going to about 84-ish here. So I'm still holding my positions there as well. Amazon, I held through it, wiped out my gain. I went long right about here, boom, boom, and wiped out my gain with the earnings. And sometimes that's what you get. Sometimes, you know, you get a good, nobody truly knows when the earnings happen. I decided to stay with it. I didn't have a big portion on that, and so I decided to stick with it. But at this point, you know, I really have to say that, you know, let me actually put up a Fibonacci here. One of the reason why I'm still sticking with my position is that we're last level Fibonacci right about here. So, you know, and currently it's tough to say what it's going to do, how it's going to play out. But if we can start to get above this level and start to taste the rainbow being the gap, then I think we can able to eat all of that gap. So, and obviously, you know, this was a pretty big higher low, so we're trading below that now. The question is, can it able to get up here? So that's kind of the question. If we can get up here, I think possibly can continue higher. So so we'll see what happens here for that. Visa, also Visa, you know, we had a gap down, but we still have uptrend support still holding. And so, you know, you can see this is a pivot level if you've been looking at my journal there. So we got pivot level holding there as well, and as well this uptrend support. So again, we got this long, big gap area. If we can start to taste a little bit, I think it can continue to get up here as well. So we'll see if that uptrend support can hold. If it can do that, then possibly it may to the upside there. The bonds actually did have a pretty big sell-off today. We've been heavily involved in the bonds since late March, and so you know what? You know, see, the thing about that is, yes, we got above this level, and you could call this a bull trap or all kinds of shenanigans you want to call it, but what it matters is we got a higher lows, and this put up higher high. Okay. So as long as that higher low, higher high is still intact, which means the trend is up, okay? So, you know what? We have this kind of a big gap area. I don't know how it's going to play out. I don't know if it's going to, you know, it's going to fill that gap. I don't know how it's going to play out, but, you know, there's a lot of support levels here. You can see that 50 MA, strong support, some of these levels, 100 SMA as well. So that's the thing about it. Just because it clears a certain level does not mean that we broke below that level, so it's going to roll over. You really got to stick with the trend. This was kind of a, we were looking at this trend line, this pivot level, because if you look at this as some kind of a double top, double bottom, then this is a neckline area, right? And originally what we had was we had this thing set up right here. We had this thing, connected through this one. But once it gotten below this level, the reason we held, I wasn't freaking out is because, well, first of all, we could have done, not only that, I was looking at the 100 SMA, and 100 SMA, and this is, I conveyed this in my article on TLT, is that last time the 100 SMA was a very, very crucial level. It was a significant level. We had a very, very similar action. Isn't that interesting that this is very, very similar action? You can see that 100 SMA there, 100 SMA here. That's very, very interesting. This is why technical analysis work. Doesn't mean it always happens, but those are the possible levels that you look for. You look after and to possibly find out some of the levels. And once they start bouncing here, then obviously that 100 SMA was a very potent level there. But today with the sell-off, we'll see if we continue lower, or if tomorrow we get something like this, it will just nullify that and continue higher. So I'm very bullish on it, and obviously I don't know if you're gonna have a huge move like this. That's what I'm looking for. That's what I'm waiting for. I mean, that's what we've been involved with this since late March. But for this to happen, market probably has to roll over, and so I don't know. We could continue to grind here like this, something like that, until a market starts to form some kind of topping pattern. And then once the market gets its correction, then the bonds can really make its move up there. So last few here, AEM, this thing has been just continue. We're still holding, remaining our positions here, and obviously this is, after this kind of move, this isn't the level to start any positions. Looks like it wants to continue higher, but nobody, we don't know how long, or how, I don't know, because I would like to see this thing pulling back or something like that, but I'm not sure. I got this Fibonacci there, and you can see last time we had something like that. We pulled back, and then we went to about 225% ratio, and then so that's, I thought maybe that we got something similar going on here, so we can possibly get up there. So we'll see, but I think, yeah, it's tough to say how it's going to play out there. RGLD, you know what? RGLD, we've been holding, just we haven't touched it since we went long, right about here at about 68.40, and just it looks like it wants to continue higher. We have kind of a consolidation pattern that you could say that's like, isn't that a rising wedge? You can say that, which could be bearish signal. However, I've seen these rising wedge fail, which means they just break up to the upside. So you can't just suspect that that's what's going to happen. That's why sticking with the trend is important. What I mean by that is look at the low, and higher high there. So even if this thing pulls back, I mean, we got a lot of support levels that it possibly finds support. And you know what? We don't freak out on pullbacks. What we do is we embrace pullbacks. So you know why? Because after a pullback, there's a much bigger move that is to come. So let's say if it pulls back, we're not going to freak out. We will hope, we'll look for next support level to add to our position. That's how you position trade, and then look for another leg up there. I'll quickly look at gold here for you guys, the last one, and then we'll just call it a night. Well, gold, at this point, looking at a minor term, I would have to say that we have to give benefit of the doubt to the bears. I mean, minor term, okay? Obviously, looking at primary term, we got these higher lows there, so, and you guys know I'm very bullish in the gold and silver and the miners, precious metals and all that. And what I can possibly see is we have this big gap here, and bulls are protecting that level. This is an island reversal. You can see that we have a gap down, gap up. This became island. Another thing that you have to really note at this point is that this time, you see when this thing came down, and put on equal lows. But when this thing came down, we did not come all the way down to this level. And this was after this long consolidation pattern. This is from April all the way to like June. 2 months of consolidation only lasted about 4 days of downturn. And what that tells you as far as a price action is concerned, they're buyers in these levels right here. They're buyers in these levels, and that's the reason why we're holding this level right here. That's the reason why this thing did not come back. And if that's true, and we have buyers right here, that means we possibly have possible invert head and shoulders. And obviously you want to see a confirmation before going long there with invert head and shoulder there. But I think if we can able to clear some of these levels, we can possibly continue higher. Next level to clear is obviously if it does continue higher, then it's this level, and then clear that some of these levels, then I think we can able to do very, very well. But I am very bullish in precious metals going into 2017. I do believe that they're going to see about 250% gain in about 3 years here. So if you learn more about that with entry points and when to take some profits, when to add some more, and some recommendation options and stuff like that, feel free to check out my website there for subscription. But anyway, yeah, I think that's all I have here, and that's for me. So hopefully this has been helpful to you, and if you have any questions, again, feel free to ask questions through the comments there. But all right, well, we'll see what happens this week, and if I see anything, I'll try to blog about it, and so let you guys know. Otherwise, have a great evening, and we'll talk soon.